Ladies and gentlemen, welcome to this special interview. Today we have a returning guest to the show, Simon Popple of the Brookfield Capital Intelligence Report, located at brookfieldcapital.com. And I got to tell you, if you thought the skyrocketing debt and the flat out money printing in 2020 was alarming, well, it's kind of looking like in 21 it's going to shape up to be downright shocking. In the US alone, we're running $1 trillion stimulus right now, and the word is that there's a $2 trillion stimulus in the chute. So we got to figure out what in the heck is going on with all of this big government spending, and more importantly, what we can do about it to protect ourselves. And the implications are global. So we're swimming across the pond today, and we're going to chat with our good friend Simon Popple to try and get a better understanding of what is happening and explore some ideas for what we can do about it. Simon, I'd like to thank you for joining us again on Silver Doctors.
Great to be here.
Now, Simon, Janet Yellen's back in the scene. She was the former Fed chair. Now she's going to be the Treasury Secretary, and she was having confirmation hearing on Tuesday. And I'm just going to read a little bit of this quote she said to you, Simon. She said, this relief package, meaning the new one that Biden is proposing, she said, this relief package right now with interest rates at historic lows, the smartest thing we can do is act big. Benefits will far outweigh the costs, especially if we care about helping people who have been struggling for a very long time. So, they're telling us, Simon, they're telling us that they're just going to just straight out explode the debt, print money like never before, and they're taking the moral high ground on this, saying, this is the thing that we need to do. It's the right thing to do. Apparently the next round of stimulus is going to be about $2 trillion. This is just debt monetization. This is just money printing. So, it's kind of getting crazy over here with that. What is it like in the UK, or maybe what is it like in the Eurozone, or just in general? Are you seeing the same just government spending at such a level all around that we're seeing? And what are your thoughts on that, Simon?
Right. Well, I think debt is going up all over the world. It's not just the US phenomenon. All over the world, the levels of debt are becoming quite eye-watering. And I think that, I understand why they're doing it, because, people need to keep their businesses going, people need to eat, people need to have their livelihoods. But I think that, the piper needs to get paid at some point. And unfortunately, you can't really, walk away from that fact. Maths is maths. And at some point, this is going to come back and bite us. And so I think that, what people need to do is just be prepared as much as they can be. So, should that happen, should we get inflation or whatever kind of unravels here, that they're as prepared as they could be. And, I know I've said it to you many times, but one of the things I like about things like gold and silver is, you can't print them.
Mm-hmm. Indeed, you can't print them. And I got an ounce, just a generic round. I got an ounce of fine 999 fine silver right here. But I want to show you something else too that I recently discovered, Simon. This is Sote, and this is not an ad for Sote, but I just want to tell you that this is 400 grams, and it actually has a purity. It says on it, pink laundry soap with a maximum fatty acid of 66%. So this is 400 grams of 66% fatty acid, meaning this is like a commodity right here. And it's even like stackable. It's old school laundry soap, and it costs $1.06, and it's imported from Mexico. But my point of that is, like, you can't print silver. You can't print laundry soap. You can't print any of this stuff. So, my point with that is I'm seeing stuff disappear from the stores in Walmart, disappear from the grocery stores, disappear from Target. And I'm also seeing things going up in price every time I go. And I like to call it, field research, but just in general, the two questions are you seeing prices rise, and are you seeing stuff get out of stock in stores like we're seeing over here? That's one. And two, they just gave another $600 payment. They're looking at giving $400 payments to the people. They call them economic impact payments. But what are they doing in the UK? Are they also just handing out this money as well? And is it a monthly thing? Or talk to us a little bit just about what you're seeing in the stores and what kind of support the government is giving to people right now.
Yeah, well, in the stores at the moment, we don't really have any kind of panic buying or anything like that as of yet, which is, quite reassuring, especially after Brexit. But there are, some payments on the way to help people out. And I think by and large, they probably will help people out because we haven't got the kind of huge inflation at the moment, but that doesn't mean we won't get it somewhere down the line. So yeah, it's going to be very interesting to see how this unfolds.
Mm-hmm, mm-hmm. And you can't print gold, you can't print silver, you can't print laundry soap, but like what happens when a person, like me, I can just throw, a box of laundry soap in my basement and be fine. But what if a person, rents an apartment or lives in a tiny house, or they have to move, or they even have to go internationally or something? What do you do then? What are your options then, Simon?
Well, I mean, I think, you've got quite a lot of options in it if you want to be investing. I mean, I'd never suggest anyone holds gold or silver, on their property. I think you should always have it in a safe storage. Yes, you've got to pay storage costs, but at least you don't have to worry about insurance and the safety of your property. So the size of your house shouldn't determine really, or the size of your apartment shouldn't really determine your investment portfolio. Similarly, you can invest in mining shares and things like that. What I particularly like about things like mining shares and for that matter gold is if you go abroad, you can typically still access your own personal bank account, and you can liquidate your gold holding or some mining shares or whatever you've got into cash, and then access them through your bank account. And so it's gold itself, unfortunately, is not as portable as you'd like it to be, because if you try and get through customs with a bar of gold, good luck with that. But the fact that you can go abroad, and if you've got a depreciating currency at home, then when you do convert your gold to whatever that currency is, at least you'll get the prevailing value as at that time, and then you can spend it abroad, whatever you're doing. So for me, I think a lot of people should look at having at least some of their cash in gold and silver, because I think the storage costs are far outweighed by the ability to protect your money. And I think what people forget is if they're holding cash, that's an FX play. You're exposed to currency movements, so there is an element of risk in that, just like there's an element of risk in holding gold. The price can go up or down. But I know a lot of people have got no gold or no silver, and I don't think it's ridiculous to have perhaps under 1% or something of your portfolio in something like gold.
Mm-hmm. I think those are very interesting points you're making, Simon. And I say that because, I got to admit, I guess you would have to call me a doom and gloomer, right? Because I look at this as like the Mad Max scenario, right? And as like, I'm going to use this for barter because it's not going to go bad. It's portable, it's divisible, things like that. But what you're saying is making sense in that sometimes that's not practical. But on the other hand, we also might not be getting to that kind of point in society where we're going to develop into some sort of like barter society. And in that sense, yes, I can see where you're coming from. We're having like shares and investments that are, online and things like that. I can see your point where that comes in, where it can be useful in the future there. And I want to explore that a little bit further because, can you explain that a little bit more? Because I know you wrote an article about this the other day too, but you were talking about a couple different points. One is like, the FX risk. One is like, no matter where it is, you can trade it in. Or could you just explain that a little bit more about like the portability of gold and the currency plays, Simon?
Yeah, sure. Well, I mean, let's look at gold from two perspectives, physical bullion and mining shares. Now, in both cases, you can hold them with very reputable houses, and a lot of them have got facilities where you can sell them back to whoever you bought them from, and so basically that goes into your account. Now there may be a move from your account to your bank account, but the point is you can then wherever you are in the world you can access your bank account, you can access your funds, and so I think that is particularly attractive to people who may be traveling, may have relatives abroad, and perhaps, some people, don't know where they want to live. And, you still have to go through the visa process and everything like that. So, converting your money from what it is into wherever you're going, your visa may get rejected. And therefore you then have to convert it all again. And, at least if you've got something like gold, physical gold, it's fairly currency agnostic. And, providing the price stays, roughly where it is, you should be in pretty good shape when you come to convert it, whatever you've chosen what to do. Now the mining shares are, largely mirror that. I mean, I think what I would say is, the producers are probably more in line with the gold price. You've got a leverage play on the gold or silver price, whatever it is, whatever they're mining. And the explorers are very much down to, what they're actually looking for. Obviously, they do improve with metal prices. But the thing that really sets an explorer on fire, or the share price on fire, is, if they make a really good discovery, which means that they're, a far more attractive business than they were, prior to doing that. So, but again, you can sell the shares, you can monetize them, put the money in your bank account, and wherever you are in the world, you can access it. So, I think that's, quite an attractive factor for investors, just to have that sort of liquidity.
Mm-hmm. Yes, and it is. It's interesting, like thinking it like that, because yes, there comes a point in time where I don't need this, but I can sell it, and if it's online, then that can be easy in that sense. But let's stick about this with the contrast between the miners and gold and silver here for a second, Simon, because there's a little bit of debate going on right now in the gold and silver community where it seems like people are not sure, right? Because generally speaking, and you can correct me if I'm wrong on this, but generally speaking, the miners have lagged gold and silver's rally, although silver has lagged gold severely, not even halfway to its all-time high. Well, barely over halfway. But my point with that is there's the thought that either gold and silver are going to fall down more in line with the performance of the miners, or that the miners are going to start catching up to the performance of gold and silver finally here. So do you have any thoughts that you would add on to that, Simon?
Yeah, I mean, if you look at the M2 money supply, which is obviously M1 with, a few bells and whistles added to it, that's obviously been going up and up. And with the money printing, I don't think that's likely to change. I think M2 supply will continue to go up. And the gold price has correlated with that, reasonably well. And so with more money printing going on, I don't think it's unreasonable to assume, the gold price could continue to improve. Now, yeah, you're absolutely right. Silver is, significantly underperformed gold. And I think the silver price at the moment is about $25-ish an ounce, and gold sort of 1,800 and something. Now, the historic ratio has been about 1 to 65. And so for that ratio to come back into play, either the gold price has to come down, which I think is unlikely, or the silver price has to go up, which I think is more likely. So I do see, silver prices improving, and I think it's only a matter of time before that happens. But if the gold price continues to go up, then logically silver should follow.
I think it's only a matter of time too. There was an interesting tweet yesterday by William Middlecoop. He was like, silver was $50 in 1980, and it's half of that today. And he was like, but a Big Mac in 1980, well, the price for a Big Mac today is 5 times that. And I was like, yeah, but you forgot to mention that the patty's even smaller, right? So there's a whole bunch of different dynamics going on. So just talk to us a little bit in general. So what are some of the commodities and some of the miners, or what are some of the things that you're looking at right now, Simon?
Well, I mean, I like commodities across the board, really. I mean, I particularly like gold and silver, but because you can't print commodities, I like things like rare earths, uranium, cobalt, nickel. I think there's a lot of upside in commodities because, they've been pretty unloved. And, if you look at other asset classes, real estate, bonds, other equities, if they're not in a bubble, I think it's widely viewed as that they're not far off a bubble. But the same can't be said for commodities. So, I do see a run up in commodity prices over the next few years. that's already starting to happen. If you look at the share prices of some of the major commodity producers, they're already starting to take off. But I'm hoping this is just the start of what could be a very attractive bull run.
Mm-hmm. And when you're talking about, the commodities and what you're doing, like, what are some of the things that you're analyzing when you're looking at some of the investments that you might be interested in?
Well, I use something which I call the bridge system, which is an acronym for balance sheet, resources, infrastructure, diversification, grade, and exploration potential. And I think this is quite a good framework to use. I mean, obviously there's other things you want to take into account, like management and geography and everything like that. But I think that using this framework, if it gets through this framework, then it's sort of taking a giant step in the right direction. And if it doesn't get through the framework, then I would be inclined to pass on it, because I think there's quite a few companies that do. So I think it's good to have a sort of a test for when you're analysing companies. And I strongly suggest people, that they have a rigorous structure that they go through, and if something doesn't make the grade or cut the mustard, to divest it and look for something that does.
Mm-hmm. Yeah, and as you're talking about that, I'm thinking about like buying a house or buying a car, and like I know that like in my mind when it comes to buying a house, when it comes to buying a car, I'm thinking, okay, well if it doesn't have this, that's a non-starter for me. I'm not even going to look at that any further. So is that what I'm hearing? Like you're saying, like you got to make sure that you're not just throwing darts up on the board and picking stuff. You're actually going through whether it's your system, whether it's someone else's system, whether it's your own developed system. You got to have that discipline.
Yeah, I think discipline is incredibly important. And not just mining stocks, but as you say, buying a house or something. If you've got two cars, you need two parking spaces, and it's the same with mining stocks. I think if they are all different, and you need to devise a strategy. Everyone's strategy should be different, because people are different, and depending on what stage you are in your life, older people probably want to take less risk than younger people, and there's some mining stocks out there that are lower risk, there's some that are incredibly high risk. So you really need to have a criteria and look at it, and make sure that what you're doing is consistent with your strategy.
Mm-hmm. Now, Simon, as we're looking at a rising price of crude oil, base metals, wheat, corn, stuff like that, I guess the point there is, and I lost my train of thought on that, but okay, the point is that with a rising tide lifts all boats is my point, because I've heard that phrase before. So if we're talking about the commodity sector in general, it seems like a rising tide is going to lift all boats. But what I think I'm hearing you say is that some boats are going to get lifted higher than others. Is that something that I can hear you say, Simon?
Yeah, no, exactly. I mean, you're absolutely right. A rising tide does lift all boats. And I think, some boats deserve to be lifted and others probably don't. And, over time and, the experience of writing the Brookville Capital Intelligence Report means that, I feel like I'm much better positioned to spot some of the winners, and for that matter, the losers. And it means that, if the tide does rise, then there may be some stocks that you want to sell, and some you want to keep, because even if the tide falls, those stocks that are really good, the boats should still be, sailing into the ocean, whereas the stocks that are weak, they will go down with the tide and could well sink.
Mm-hmm. So it's definitely not throwing darts on the board. You definitely got to do your research, even though it's generally considered a commodities bull market. Definitely.
Absolutely. And you have to be very, very careful what you do. I mean, it's a very volatile market. These stocks can go up 10, 20% overnight. And, it's very important to do your research. And, there's a lovely saying that, you can be lucky and you can be smart, but don't think that you're smart when you're lucky. And, I think that, that's not a good, so that's not a bad mantra for investing in commodities, because, if you're in a bull market, you can invest in a stock and it can go up dramatically, just like the property market. If you invested 15, 20 years ago, you've probably done phenomenally well without a huge amount of knowledge as to what you're doing. So yes, you do need to be careful, because when the bull market comes to an end, be it property, equities, bonds, whatever it is, if you're not in good quality assets, it can get pretty ugly.
And it's interesting, Simon, because a lot of people are saying, like, just to give you an example, well, he was 13 at the time. He just turned 14, but at the time, 13-year-old son asked me, Dad, what's day trader? And then he was like, can I day trade stocks? And I'm thinking, that's not good, Simon. That's not good at all. And then I was talking to one of my Mexican friends, and he was saying, hey, should I get into Bitcoin? What do you think about that? I'm like, oh, that's not good at all. Mexican with no money talking about getting into Bitcoin. So my point is, if it's true that these markets are going to come down in some way, a lot of the general thinking is that gold and silver are going to come down, the miners are going to come down. But I've been arguing, like with the miners, that's been such an unloved sector anyway, that sure, they're doing okay, but they're not doing great. So is there a whole lot of downside risk if the general markets have a correction? I'm not thinking that there is. And the same thing goes for gold, because one of these stock market corrections, instead of going down, gold and silver going to spike in price. Or am I making any sense at all there, Simon?
Yeah, no, absolutely. Well, I think that, 2 points. One, it makes sense to have some cash. So if we do have a correction, at least, you can buy, some stocks at, what could be significantly lower prices than they are today. And if there is a crash, you tend to have a liquidity crisis as well, where people are basically fire selling things to get their hands on cash. And that typically affects all sectors, not just in the mainstream. I would expect gold and silver companies to get hit as well. But what you tend to find is when that period's over, the gold and silver companies should bounce back a lot harder. And it may be that, because of that, when there is a crisis, you may find that people are selling, depending on the nature of the crisis, they may be selling other stocks and flocking into gold and silver stocks. I just don't know. No one knows. But so yes, there is some potential downside, but because you're buying into a tangible asset, then if you buy the right companies, you should be in a pretty good position going forward.
Mm-hmm. And Simon, as we move through winter here, what is something that's on your radar the most right now? And if I had to guess, I'd imagine it was Brexit. And if that's what it is, explain a little bit about the ramifications to that. But if it's not, what is on your radar as we're moving through winter? Like for me, I'm thinking a lot about these lockdowns and these shutdowns and just the pandemic hopefully running its course overall. That's what's on my radar a lot. But is there something that's on your radar right now as we're moving through winter, Simon?
To be honest, I think my radar is not massively different to yours. COVID is affecting us all very much on a personal level with lockdowns and things like that. I'm sure Brexit is affecting us, but Brexit tends to affect us outside the house. We still got the same radio stations, TV stations. As I say, the supermarkets have still got food. So, I don't think that there's, let's say, clear and present danger with Brexit. Obviously, a lot needs to be ironed out, but it seems to be going better than perhaps many thought it would do. Being essentially locked in your house, unable to go out, is probably what our main concern and main worry is at the moment. There's going to be a new normal. I can't see us going back to what we were, and no one's got any idea as to what the new normal is going to be. And I think that's quite concerning as well, because it could take a long time before we hit the new normal. But even when we hit it, we may not realize that we've hit it for a while. I think that's what's scaring us as much as anything.
I would agree with all that, and I'm not looking forward to this new normal at all. I'm just looking forward to I don't know, trying to get some semblance back to normal life. Simon, tell people what they get out of the Brookville Capital Intelligence Report.
Great. Well, look, I mean, basically, it's a weekly report. I cover predominantly gold and silver, but also other commodities as well. You know, we had a stunning year last year, and obviously we're hoping for another good year this year. And it's really for, you know, people who want to invest in commodities and, you know, perhaps diversify their portfolio, and, you know, just you know, look at other areas that they're perhaps less familiar with. And I invest in everything that I tell people about. So you know, I eat my own cooking, and you know, we've had a lot of people renew their subscriptions at the end of last year. So you know, people seem to like what they get.
Indeed, because the point is you're paying for a subscription, but it's worth so much more in the value than the price that you're paying, because what you need is you need to be able to maximize your movements in these markets to be able to capitalize on those gains, if I'm understanding that right, Simon.
That's right. You need to, I mean, you need to understand what you're doing, and you know, the cost of subscription compared to, you know, the profits that people have been making. Chalice, which was my best performer last year, you know, I put that up when the shares were trading at about 15.5 cents, and last night I think it closed at about $4.70. So yeah, I mean, you know, when things take off, it can be fantastic.
That is maximum leverage, if I could say so myself. And if you're interested in that kind of leverage, you need to head over to brookvillecapital.com. Check out the Brookville Capital Intelligence Report. Simon, I'd like to thank you for joining us again on Silver Doctors.
Great to be here. Thank you.